Let's get more on markets with Sraboni Haralalka, co-founder of Wodehouse Capital Advisors, which manages investments for multi-family offices. Good to have you with us. First off, your take on the RBI's clampdown on those shadow lenders.
Good morning, and thanks for having me. Well, this was coming, for a while, and this euphoria, is one of the risks that we see in the market because there is a lot of optimism, I would say, overconfidence right now, and we see customers investing blindly in the markets, chasing growth, and that has been fueled by these non-banking financial institutions who are lending monies for this kind of speculation. So, this is a good move, I think, by them.
But do you think that it will impact systemic growth in the non-lending business in India?
Not really. I think they are just trying to curtail the short-term froth in the market. And the non-banking financial institutions is just a small part of their business. There's a lot more that they are doing, which is supporting the economy, and that should continue, and that should continue to get valued.
Of course, when it comes to India, Sraboni, it is about the gangbuster growth in excess of 8%. How are your clients, and how are you advising your clients to capitalize on that growth?
Well, we are a family office and an investment bank. We also do M&As, so we kind of understand the consolidation that's happening in the markets and the fact that being a high-growth economy, the equity markets are going to do well. We've already had about a decade and a half of a bull run, and that's going to continue. However, there is short-term volatility because of the elections coming up, because of this euphoria that we are seeing in the market. So, our focus as a family office always is on capital conservation. However, we also our theme continues to be a dynamic asset allocation one. And wherever there is any opportunity in a client's portfolio to invest in the equity markets, we advise them. And, managing large portfolios gives us the flexibility of investing larger amounts in private equity investments, which our M&A bank helps us value well. And that's how we are partaking in the growth.
Are your wealthy clients doing anything differently now compared to 12, 24 months ago?
No, consistency is what we kind of focus on because, that's how you ensure that while you partake of the high growth, you also ensure that the risks are managed well. And, we continue, like I said, with the asset allocation model. And wherever we see an opportunity for growth, we invest in equities. However, we keep a strong check on the kind of investments that we are doing. And, we look at certain sectors like maybe healthcare, pharmaceuticals. We look at dividend-yielding stocks. We look at any businesses that get supported by AI. And those are good opportunities to invest in. That's what we look at for our wealthy clients.
How about in terms of startups? Because we know you have a platform linking wealthy clients to startups. How much appetite is there?
So we started something called the Wodehouse Investment Network, WIN, where we launched 2 events where we actually got startup founders who we had curated and valued. And we got them to come and present their businesses to a very select few investors. And that was a good start to the business. But that is something we are doing on an ongoing basis now. We regularly have startup founders who come to us with their investment ideas, which we cannot, pick up on the M&A side because the size of our transactions are larger. However, if we feel that it's an interesting business, good promoter, we take it to our family office or our set of investors. We help evaluate them, help them to the valuation, understand the risks, and also negotiate their positions in that particular investment.
The thing is, has interest, appetite been affected by Byju's, by Paytm? What are you seeing? And what are you seeing in terms of the pipeline of IPOs coming to the market in India?
Well, my predecessor just spoke about, there's been a huge, a lot of about 56 IPOs that have hit the market in the last 12 months. And a lot of them are just being pushed. And, they are less than 100 million when they come in list. So, we don't really speculate. We don't really look at any IPO that is hitting the market unless we feel very strongly about the kind of business that it's a sustainable long-term growth business. We only partake in that kind of business. And certain businesses have suffered in the last year or so for regulatory reasons. But like I said, if it's a sustainable business, it's a good business to invest in. We will have a look at it.
Sraboni, let's talk about risks. Geopolitical risks are rising in the South China Sea, in the Taiwan Straits. I'm just wondering how your investors, the wealthy families, are looking at these risks.
Well, the Indian markets have been fairly, strong in spite of all the risks that have, at any point of time. I was talking to somebody, and at any point of time, there are about 30 wars that are happening across the world. In spite of that, we see our markets doing well. We've been resilient. So while we do have an eye on what's happening, across the world in various areas, whether it's in the southeast part of the Asian countries or Middle East, we feel that the Indian markets have withstood a lot of shocks and will continue to grow well. And as long as we are not taking short-term speculative calls and are in it for the long term, and we understand the risk of the companies that we are investing in, we should be fine. Investors should be fine.
Is there reason to be concerned about hot money? Some are saying that perhaps we're beginning to see a bubble forming in India. There's so much froth. Consolidation is bound to happen, and that bubble is going to burst within the next 12 months.
I don't think so. Well, a little bit of that bubble is burst, when we just spoke about JM Financial and the rest who've been funding the short-term investments into IPO markets and others. And we are a little worried about the inverted yield curve as of now. The short-term rates are much higher than long-term rates. And that is probably the hot money we are talking about. However, there is a huge amount of wealth that the investors in India have managed to, create. And that money is coming into the market, as well as a lot of FIIs, which are, looking at the Indian markets because of the kind of growth that they see here. And of course, there is a lot of FDI flowing into the country as well. And all of that is fueling the growth. And I don't think that's hot money.
Sraboni, thank you so much for that. Sraboni Haralalka, co-founder of Wodehouse Capital Advisors.